Getting some news on Ford and Rivian. Let's get to Phil LeBeau on the Newsline. Phil.
Sarah, Ford has confirmed that it has dropped plans to jointly develop an electric vehicle with Rivian. Ford owns 12% of Rivian. And there's no ill will here, guys. This was probably the worst kept secret within the auto industry, that Ford and Rivian were never really going to move forward. It was pretty clear for some time that they were not going to go forward with the joint development of an EV, though they still have, obviously, independently, they're both working on electric vehicles.
Steve, this is such a hot area. We were just talking about some of the ETFs that trade off of it these days. But tell me where you think investors should be positioned.
Well, thanks, Kelly. I mean, I think that the real interesting thing, as you just mentioned, is just the broader thematic. If it's anybody that's playing electrification and mobility, it's not just the OEMs, it's not just the batteries, it's all the way upstream to the materials. You know, the U.S. names that we were focusing on today were names like Albemarle and Livent, who are really the blue chip.
How much more upside do you think there is in a name like Albemarle, which is, I don't know how to quantify if it's a crowded trade, but it's certainly a popular one we hear more and more about these days?
They're 30% market share of an industry that, and this is really why you can really talk about the lithium decade, is lithium demand will triple between 2020 and sometime around 25, 26, and it'll double thereafter. And it's just unclear to many people in the industry, including us, how we get that second half of the decade amount of volume. So I think that 30% market share obviously gets capitalized at a very high rate, but also the company's got some really interesting growth prospects and very low cost, high quality assets that allow it to continue to capture that.
Where does lithium come from, Daddy? I mean, it's kind of like one of those questions. I mean, where do we get it? You're pointing to it that the supply is what is going to really be critical here.
This is a commodity unlike many that we've looked at. We've looked at a lot of them over our careers. And I think one of the interesting things is elemental lithium is, probably available, under your very feet right now. The question is, what we need to find is lithium in a form that can be purified into battery grade, which is a very high quality. Think about the OEM supply chain and the decades it took to work out all the issues with all of the elements that went into an automobile. But then also think about it, we're driving EVs because we believe in sustainability. And so the OEMs are also under a lot of scrutiny in terms of how is it extracted? Is it extracted in a sustainable way?
Right.
But then also, we want to ship this material all over the world. We want to have it, at least on the same continent where we're going to build the material. Qualified battery grade lithium that ticks all the boxes of what the battery producers and the OEMs and the consumers are going to want is very difficult to find. And I think that's why prices have gone, absolutely parabolic this year.
Getting more bullish on Tesla. That's Dan Ives of Wedbush. He's coming out with a new note and putting a $1,400 price target on the automaker that matches the highest target that's out there. Dan, I'm curious about the timing of this call and why now is the time to come out and say that Tesla's going to make this next push.
I think right now China is accelerating going 2022. And I think that's worth $400 a share of the Tesla story. I think they're going to continue to be able to accelerate that. That could be 40% of deliveries next year. This is really a China-driven price target increase, but also in terms of what's going on across the world. I mean, we're seeing this green tidal wave play out. It's a $5 trillion market, and I think a further re-rating in Tesla continues to happen.
Dan, why aren't you fazed much by Elon Musk selling down his stake?
Now, the fact that he did it in a Twitter poll, that could only be one company and one CEO that ultimately does that. But from a PR perspective, I mean, that I think that ended up being a win. Because if he just started selling stock, indiscriminately and without sort of notifying, this is a stock today that could be $850, $900. But Musk is part of the cachet and part of the genius that is Tesla. But it's not a zero-sum game. I mean, GM, Ford, Lucid, others are going to be significant beneficiaries in terms of how we sort of see this accelerating into the next 12 to 18 months.
Well, and all those other guys are a lot cheaper, like in terms of valuation, in terms of just absolute stock price. I mean, why not counsel investors to maybe buy the ones that have more upside?
Well, I mean, GM, we view bull case $100 next year. I think GM is just a massive re-rating story on EVs. But I think when you look at the pure plays, and you've seen it with Lucid, you've seen it obviously with a lot of the excitement of newcomers coming out. And of course, you see it in Tesla. these are really growth transformation stories. I don't view them as auto stocks. I view them as disruptive technology players. And it's an arms race in terms of what I view as the biggest transformation to the auto industry since the 1950s. And that is really how you're seeing this just massive shift in terms of the way the street's looking at auto companies. And you've seen it in GM and Ford. I think you'll see in VW as well in terms of that re-rating.
Dan, a tweet from Ford CEO Jim Farley caught my attention last night. He said, quote, "We are now expecting to produce 600,000 EVs a year globally by the end of 2023, 2 times our original plan." I mean, Farley at Ford is absolutely fired up. I mean, does Elon Musk need to be worried about what Ford is cooking up?
I mean, he's had the golden touch so far. And I think you could also say for what Mary's doing at GM, but they're diving into the deep end of the pool on EVs. That's what Farley's doing. And that's more and more what the re-rating is going to be in terms of, they could even lose share in traditional ICE. You gain in EVs. This is a stock that could go much higher. And I think that's a smart move.
Hey, just quickly, Dan, got to ask you about the Apple car as well. A report yesterday from Bloomberg's Mark Gurman said that Apple is looking at full autonomous capabilities in its electric vehicle that it's developing. And I think 2025 was the target date that was in that story.
Yeah, it's a matter of when, not if, Apple comes out with the Apple car. We've assigned 75, 80% plus chance that this happens. We've said 2024. Gurman's talking about 2025. Apple's not going to view this market from the outside. It's a fourth industrial revolution playing out. And I think Cook and Company within Apple Park, they have a lot of things going on when it comes to autonomous. Could be a partnership like Lucid, Ford, GM, or others, or they could go on a standalone basis.
Tony, happy Friday. Good to have you.
Thanks for having me, Carl. Good to see you.
Your note made a lot of waves earlier in the week regarding long-term buyback trends. But I wonder what the more important dynamic is, capital returns or big growth categories like an EV?
Look, I think at the end of the day, stocks, multiples, and valuations are most correlated with their top-line growth rates. And so I do believe that the biggest question for investors is, at what rate can a company like Apple that is $350 billion in annual revenues grow over the next 3, 5, 10 years? And that's why the car is such an area of intrigue, ultimately, when investors hear that Apple may be accelerating plans to move into this market.
I wonder if you are a buyer of the theory that their creeping move into vertical integration. For a while, we thought, oh, well, they just want easier access to chips for their iPads and phones, is leading to that, to the ultimate vertical integration, which would be the most complex thing you can make, short of an airplane, being a car. I
would be really surprised if Apple vertically integrated anywhere near the extent that Tesla does in looking to make a car. And so I think you'll continue to see Apple leverage its R&D strength to push on design integration. Apple would look to be more integrated. They're an IP-rich company. That's where their core talent lies, is creating and developing extraordinary products. It's not in assembling and manufacturing those products.